Hi everyone, I'm Alexa and welcome back to another episode of RE News. Now today we're going to talk about Singapore as an investment destination for luxury properties. Now, so far, some of the topics that we have discussed on our PLB Insights page include the overview of the real estate market in Asia, how the rental market in Singapore compares to the rest of the world, and the Evergrande crisis and Singapore as an investment destination. We have also talked about how to buy real estate in Singapore as a foreigner. Now, all these articles set the stage for a deeper look at Singapore as an investment destination for luxury properties. We will look at how Singapore has performed consistently as a preferred destination for real estate investors. At the same time, we'll also look at some of the takeaways from corporate reports and translate them down to what it means for Singapore's luxury property segment. So what are some of the leaderboards for real estate investing? Now, in real estate, choosing the right location has always been the singular focus. Now, according to the PwC Urban Land Institute's 2021 report on the emerging trends in Asia-Pacific real estate, Singapore is the foremost choice in high net worth investors' mind. Now, Singapore is ranked number 1 as an investment prospect and has the best city development prospects. Singapore also ranks number 2 on the likelihood of rental growth. Now, obviously, this is due to excellent city planning by URA and cooling measures that keep real estate investment sustainable by preventing bubbles from forming. And as most of you know, strong stability factors on geopolitics and natural disasters further add to Singapore's appeal to investors both abroad and at home. So just looking at the data, you can see that overall, Singapore has a great track record among property investors across the world. Now, in the past 4 years, Singapore has come in consistently at top 3 in terms of its investments prospect ranking. Now, this consistency in terms of being a quality prospect means that Singapore is much better positioned to have a resilient property market, all thanks to our geopolitical stability and sound statecraft. Now, on top of being ranked as a quality investment, Singapore also has a geographical advantage. Now, as an investment transit location and an investment decision itself, Singapore ranks amongst the top 3 for China's high net worth individuals. Now, with Hong Kong dropping in the ranks as an investments prospect in the table shown, we expect that Singapore will soon surpass the US and potentially Hong Kong as an investment decision for Chinese investors. We expect the foreign demand for Singaporean real estate to be strong despite government cooling measures due to its appeal as a safe haven for taxes and geopolitical instability. Now, many of us may moan when new regulations come in place, but the fact is, active regulatory action at planned intervals ensure the sustainability of long-term growth. And this is a benefit not to be understated, as it is a rare policy stance that we do not see in other destinations. Now, according to the 2021 CMB B&C survey, Singapore being a top 3 choice for assist transit regions and destination for China's high net worth individuals is going to set Singapore up to be a great position to benefit from increased asset allocations to real estate by Chinese high net worth individuals and the global sovereign wealth funds. Now, looking at the graphs, you can see that China high net worth individuals have doubled their asset allocation from domestic to overseas from 15% in 2019 to 30% in 2021. Now, the pandemic seems to have accelerated the transition to investment abroad. Now, looking at sovereign wealth funds' real estate allocation trends, we have a total estimate assets under management of about US $10.5 trillion. We also see a positive trend for their asset allocations into real estate. Now, based on the information that we have discussed so far, Singapore is in an excellent position to benefit from global inflows of capital into its real estate market. Now, its outlook is still exceptionally bullish and resilient despite the global financial headwinds from rising interest rates, commodity prices, and geopolitical instability. Now, taking a look at the market sentiment in Singapore's property market. Now, the bullish case is supported by Morgan Stanley along with our own research at PropertyLimBrothers. Now, let's take a look at the market sentiment in Singapore's property market. Now, Morgan Stanley's bullish case for Singaporean real estate will see prices doubling from 2018 to 2030. And the basis for expecting growth over this decade are due to our strong fundamentals such as strong GDP growth, investment outlook, foreign talent inflow, and a controlled supply of land. In addition, market expectations of regular cooling measures are also reflected already in current prices, preventing demand from getting euphoric and speculative. Now, this puts the aggregate property market at approximately 6% of compound annual growth rate. Despite the COVID-19 pandemic, the bull case still stands largely. However, there are some exceptions such as the decline in commercial real estate rentals. Nonetheless, we expect reasonable capital gains based on the healthy growth rates in price in spite of the pandemic and macroeconomic headwinds. Now at PropertyLimBrothers, we have focused our attention on the luxury property market in Singapore as one of the best segments to invest in. Now we define this segment as premium condominiums, landed properties, and good class bungalows typically found in District 9, 10, 11 with price per square foot of $3,000 to $6,000 and above. Now these properties are usually freehold with a quantum of Singapore $5 to $20 million and above. And once again, these properties will normally be found in areas like District 9, 10 and 11. And now let's take a look at the luxury price trend chart for D9, 10 and 11 from the year 2020 Q1 to 2022 Q1. Now looking at the general price trend for private condominiums and landed properties in District 9, 10, 11, the luxury property market has made a great recovery. Now for the past 2 years, we see a simple average annual growth rate of 5.5%. However, when we look at the recovery momentum from Q3 of 2020 to present time, prices have grown a tremendous amount at 17% over the past 7 quarters. Now, in contrast, Singapore's aggregate performance for the entire property market is a strong 21% over the last 2 years. Now, we see the luxury market perform a lot more consistently with a healthier upwards trend. In addition, strong macroeconomic fundamentals support this move with a trend of high net worth migrants coming into Singapore for both residential and commercial purposes. We now compare the breakdowns of foreign investment into the landed and apartment condo segments. Now we see that the foreign interest in landed property at 1% is much lower than in apartment and condos at 19%. Now, part of the reasons might be due to government rules which require foreigners to obtain approval from the government prior to being able to purchase landed properties. We also see that foreign ownership is more diverse for landed property at 48% than for apartment and condos at 25%. Now, a key demographic we wish to highlight is also the presence of Chinese investors in the landed properties at 28% as opposed to apartments and condos at 34%. Now, this might be due to the strict LDAU approval criteria by the SLA to buy landed properties in mainland Singapore. Now, another possibility is for high net worth foreigners to opt for Singaporean citizenship. But this would remove them from the foreigner category, aiding their entry into landed properties. Hence, even with an increase in foreign interest, the deviation from 1% would still be very minimal due to the strict LDAU approval criteria. Now, over the course of the decade, we do expect to see this landed property segment see more foreign interest with Chinese investors leading the charge. This is provided, of course, that the government policy does not become more adverse to foreign capital. Now, at this juncture, I think it is also good for us to remind you of the likely impact of the latest 16 December 2021 ABSD changes for foreigners and developers on the luxury market. Now, the ABSD for foreigners buying residential properties hiked by 10%, going up from 20 to 30%. Developers are also hit by a 10% increase in ABSD, going from 25 to 35%. Now, this could price out some investors looking to invest in Singapore, creating a selection effect on wealthier foreign investors. By extension, this could also drive up foreigner demand for luxury properties in Singapore. Now, foreign investors who are priced out of the residential property market could then go to commercial property as an ABSD-free option. Now, the low foreigner interest in Singapore's landed property scene might be due to LDAU's approval required for purchase. Nonetheless, the current foreign ownership at 1% is a modestly low level and can see potential rise in the coming years depending on URA's policy. Now, let's share some closing thoughts. Now, in general, Singapore is a good prospect as an investment destination for luxury properties, topping the leaderboards for investment, development, and rental matrix. In addition, we also have strong policy factors backing up the strengths of this choice. Now, looking at how capital is flowing from Chinese high net worth individuals and sovereign wealth funds, the real estate market as a whole might see more capital flowing in, be it foreign or local. Now, this in turn will then propel the real estate market to new heights in 2022 despite global macro headwinds. Now, whether you're a local or foreigner investors, we are here to help you. If you like our content and wish to discuss more about how it relates to your portfolio and investment needs, do feel free to reach out to us at PropertyLimBrothers for consultation. I'm Alexa and this is RE News by PropertyLimBrothers. See you next time.